everyone. My name is Rajesh Minocha. I'm the founder of Financial Radiance. Welcome to my YouTube channel. I will be speaking today related to the features of the ELSS and the PPF products. And in the end, I will be providing a bonus tip in terms of how we can save taxes without making any investments. So stay tuned till the end for that. This session is applicable for people who have opted for the old tax regime because that's where we save the taxes under Section 80C. I do recommend that we should be opting for the old tax regime because that is one way in which we can save taxes and also create wealth for the future. We need to compare the features across both ELSS and PPF. There are other products as well available. I like these two products the most. Of course, there is the EPF, the Employee Provident Fund tax benefits, and your insurance premium, and also the money which we spend towards the tuition fees for our children. That also gets included under 80C. So the first feature which we should compare is the product risk. The Public Provident Fund, or the PPF, is guaranteed by the Government of India. So it has the highest sovereign guarantee with no default. Whereas in case of the equity linked saving schemes, that's the ELSS, this is a market driven product. So depending on how the market performs, this product also does the same way. And it could so happen that if the fund which you have selected is not performing well, but the market is performing well, then obviously it is the fund's performance which will impact you the most. The second feature what we need to compare is the returns. ELSS, since it is market driven, the returns can be very good, or there can be periods in which the returns are low or they are negative, depending on how the market behaves and also depending on how the fund does. And it becomes very important to assess from that perspective, though over a long run, the equity really gets us good returns. Whereas in case of the PPF, this is decided by the Government of India every quarter and the interest gets reset. If the government feels that the interest rates need to be reduced, then this product also gets impacted, and then it is your entire amount which will be reset at the new rate. It's not the investments which we do from then onwards, but the entire investment which gets impacted. That, according to me, is a very big risk what we take, because it may eventually not beat inflation, or it may just be able to match inflation. Whereas equity, by investing in a product like an ELSS, has the potential to beat inflation over a long period. The third feature what we should look at is the lock-in. That's where ELSS scores very high as compared to the PPF. In ELSS, the lock-in is only for 3 years, which means that every investment is locked in for 3 years. So if you're doing an SIP, then every SIP gets locked in for 3 years. This is very low as compared to the PPF, where the lock-in is 15 years, which means that once you open a PPF account, you cannot withdraw it completely before the end of 15 years. Though there are provisions available in between where you can take a loan against your PPF amount, or there are certain partial withdrawals which are permitted. Fourth feature what we have to look at is the taxation, and that's where the PPF scores high because the entire money on maturity is tax-free, both principal as well as interest. Whereas in case of ELSS, it follows the equity taxation, which depends on the rules related to the taxation in the year of redemption. The rules what we have right now related to equity taxation is that up to 1 lakh of capital gains, there is no taxes, but any amount over that, it is subject to tax at 10%. Next feature what we should look at is related to the product research. Now, when you buy a PPF, you can buy it from any of the scheduled public sector banks or some of the private sector banks, or you could buy at the post office. The product is the same irrespective of where you purchase it from. In case of an ELSS, it really depends from which fund house you're buying and what fund you're buying. So you really have to do your own research in terms of understanding how has been the performance of the fund house and the fund manager, what's been his style of investing, objectives, you have to look at certain ratios, and there are a lot of other research which needs to be done before we really finalize in terms of which ELSS product we need to purchase. In one of my previous sessions, I've already spoken about what is the kind of research we need to do when we are looking at investing in a mutual fund. So you may want to refer to that video. So these are the different features which we should be comparing before really deciding which product we eventually want to buy. I mentioned in the beginning there is a bonus tip, so here it is. After having invested for 3 years, you can actually get the tax rebates without really investing further. How is that possible? It's possible by ELSS. So if you stay invested diligently from the first month to the 36th month, then in the 37th month, you simply redeem your investments which you had invested in the first month and reinvest it once again, and you continue the cycle for the entire duration, and that way you're not investing any new money, but you continue to get the tax rebates. This of course is under the assumption that the value of the ELSS fund has not gone down, because in that case then you'll have to invest for the remaining month. So that's been a bonus tip, though I don't really recommend this method because ELSS is a good way of generating wealth over a long period by investing in equity. Just because it is maturing after 36 months, it does not mean that you need to redeem. It only says that there's a lock-in of 3 years. You can always remain invested, especially if your product is doing well, and you can keep investing every time, and that way you are generating wealth, and over a long period equity certainly has the potential of beating inflation. So thanks a lot for listening to me. If you like my channel, then do subscribe it. I do talk about different topics in this channel, one topic at a time. Thank you. Bye.